Since 2014, private residential property prices in Singapore have declined by nearly 12%, thanks to a series of measures introduced by the central bank to cool the hot property market at that time. While several adjustments were made in March, the Monetary Authority of Singapore said those changes were made for specific reasons and it's not time yet to unwind the property cooling measures.
The seller's stamp duty, the SSD, holding period was shortened and the rates lowered because speculative flipping of properties had declined significantly. Mortgage equity withdrawal loans, MWLs, with LTV ratios of 50% or less were excluded from the total debt servicing ratio so as to give homeowners greater flexibility to monetize their properties for retirement needs.
With the buoyant property markets in the region, economists we spoke to say that easing cooling measures may even send wrong signals to investors.
Many other countries since 2013 to today has been imposing more and more cooling measures because property prices in some of these countries have been moving much higher. Singapore is looking very attractive in terms of property investment right now. So I think it's important that the MAS or the government keeps the current cooling measures unchanged, because if you relax further any cooling measures, I'm going to see a flood of money coming into Singapore.
Mr. Menon's remarks on the property market were made at the release of the MAS annual report. For the last financial year, the MAS made a record net profit of $24.3 billion after contribution to the consolidated fund. However, Mr. Menon said that profit and loss outcomes were subjected to sharp swings and did not reflect the central bank's conservative investment approach, which focuses on steady and long-term returns. In addition, the MAS's underlying foreign investment gains remained fairly stable at $10 billion to $12 billion on average over the past few financial years. Meanwhile, Mr. Menon noted too that the global economy is in a better shape than it has been in a long while. Growth is more broad-based across both advanced and emerging economies. Global trade is recovering on the back of increased manufacturing activity and bottoming of commodity prices. Singapore's economic growth is expected to grow 1 to 3% this year, with a strong likelihood that it would be higher than the 2% registered last year. However, one expert remains cautious.
I would like to describe it like a three-legged table. Just because it can stand on its own doesn't mean it's firm, right? So it is driven mainly by a handful of clusters, especially the electronics manufacturing sector. Some of the other sectors continue, to struggle.
Moving forward, MAS says it will closely monitor the gathering momentum in global manufacturing and trade, as well as their positive spillover effects on domestic income and spending.